Hey, good evening. Happy weekend. Dan Fitzpatrick here, stockmarketmentor.com, and I want to look at Penn National Gaming. Um, okay, Dave Portnoy will be happy to see this. I think Penn's at a really good entry here. A few days ago, earlier in the week, it was announced that Penn is going to be added to the S&P 500, and that's always a good situation. This is what happened back here when Tesla it was announced that they were being added to the S&P 500. And then if I recall correctly, and I'm probably off by a day or two, but I think the stock kind of peaked when it actually was added to the S&P 500. So we don't want to get ahead of ourselves here on Penn, but I think that this pullback to the 50-day moving average, it doesn't happen very often. Today, Friday, was the day to be looking at buying this stock on this pullback. It just doesn't pull back to the 50. I'll always tend to, on stocks like this, before I buy, I'll start drawing some lines here, and they're just designed so that I can, as I'm looking at a stock and saying, okay, yeah, I want to buy this stock, but wait, what do I expect the stock to do, and to where it would still be okay with me? If the stock did this, would I still be okay buying it? And so I'll do this type of thing. I just call this envisioning lines. You can call them whatever you want, but I'll drop out the 50-day, drive out the 50-day moving average like this, and then look at kind of what the stock's done in the past. And so it looks to me like this would be totally acceptable for the stock to do this, to run up, even pull back for a few days, maybe even test the 50, maybe even undercut it. But generally speaking, what I'm looking for is for the stock not to, this was just like I moved this out of the way. I'm looking for the stock not to undercut Thursday's intraday low. So this is how I would be planning this trade. I would say, all right, I'm going to buy it here, and I'm going to keep a stop. Like right here, going to keep it right below Thursday's intraday low. And then if the stock just continues to do this, that's great. So if it runs up here to 130, I'm not going to freak out and sell it if it falls back to 120. My initial risk takes into account that the stock could fall from where I buy it all the way down to here, give me a 5.5%, maybe even a 6% loss. And so I base the number of shares that I buy on the risk per share, like we'll say $7 a share is what I'm risking. Okay, so how much would I typically choose to risk? Like, what's my maximum risk on any given trade? And then whatever that maximum risk is, $700, $1,000, $10,000, whatever, divide that by 7, and that's how many shares you're buying. And that's how you're getting into a trade like this. So anyway, that's it. Look, if you have not signed up for a free 30-day trial of SMM, why don't you give that a shot? The first 30 days are on me. I do these videos every day. We've got a very active trading forum with a lot of traders in there who are smarter than I am. They just don't have microphones. So anyway, hope you check that out. Have a good weekend. See you Monday.